Marcus, welcome to Wealth Talk today. How are you?
I'm really well, thank you. I'm really looking forward to this.
Yeah, no, it's an absolute pleasure to have you on, Marcus. I've known your name for many years. I know you've spoken. You're an author, a real expert in the field of investing, trading, and we're going to really dive into the difference between trading and investing today, and also look at this hot topic of cryptocurrency, and even hotter over the last couple of weeks. Right, lots of stuff in the news, so we can get your views on this, which would be really great. Now, as I've already said, you're very well respected stock market and wealth educator. You're financially independent yourself, and you're fulfilling your purpose, which I think is really important, which is to teach others how to do the same. And you're founder of the Investment Mastery, and that's one of the leading trading and investing education companies in Europe. So why don't we start with, why did you start that up, and who's it aimed for?
Well, actually, I didn't really mean to start it up. I was trading or starting to trade and learn. And as I started making profits, which, by the way, took me a long time, I have to tell you, I just didn't want to take money out of my account. And so people started asking me questions, and then it was first one-on-one. And then, I remember in the living room one Saturday, or was it a Sunday, having like 9 people around the dinner table. And she became my wife, but my girlfriend at the time then basically said, okay, what are you doing exactly? Inviting people in the house all the time. And I said, well, cash flow and all this kind of stuff. And she said, look, if you're going to start a business, then do it properly. And I didn't want to start a business, but okay. And that's what we did. And actually, we started off on top of a gym. So one of the programs that we did was the Wealth Workout, which was, me with full tie and regalia in the gym, boxing gloves and everything. That was quite fun. So that's how we really started, and it is one of the pillars that people need to learn, I think, So yeah, and they don't know about it. Trading and investing seems to be something that's like, ooh, mythical, and it's the city people, and we best give them our money. And why are you giving them your money? Why?
Yeah, we talk about that a lot. People delegate to others, whereas, WealthBuilders is about taking control and learning this, and education, which is at the heart of, I think, everything that both you do and we do as well.
I wish they did delegate. They abdicate. They basically go, you take control of my money. And it's almost like then they can blame them if they lose it. But it doesn't help, does it? I mean, you might as well. I remember in the 90s giving my money to a company because they had this amazing brochure. Oh, my goodness. It was just so glossy and all the graphs, and it was an amazing name, and I didn't know. So I gave them my money, and a few years later, I was down 70%. How is that even possible? And long story short, I thought, okay, well, I can lose 70% by myself. I don't need to pay anybody 3% management fees a year for losing me 70%. Plus, I'd probably learn something out of it. What not? Because they never tell you what they did wrong. They say, oh, the market's difficult, So I thought, I can do that. I'm sure I can do better than minus 70%.
Yeah. Well, there's often a catalyst, isn't there? Was that the catalyst for you, Marcus, or was there something further back, that really kind of set you on the trail to build wealth?
That was definitely one. And a lot of people are going to say this. I went on courses like Tony Robbins, for example, back in the 90s. First one was Cardiff, UPW 2000, and only 2,000 people, were there. And and then they start talking about these things, and they go, oh, really? Okay. Because if you can make money when markets go down, I was like, how the hell, and that kind of really hooked me. I was like, how can you do that? Make my way, and that was it for me. I said, yeah, I want to know something where I can make money going up and down.
Yeah. So I guess explain to us, what is the difference between trading and investing, Marcus?
Well, for me, it's just as simple as trading is more short term. So you're buying, selling, and we always say that you'll be in there for days to weeks, whereas investing is more long term. So that might be months to years. And we've been lucky over the last few years, of course, since 2009, we've been in the longest bull market since the history of the stock market, so we haven't had much of the kind of the going down stuff. And so it's really been months. But what might be coming up now might be, finally, we might have to be in there for a few years. It just delays the percentages that we get. They will still come, but you might have to wait a little bit longer if we go into a bear market.
Yeah, and what are some of the different skills required? Is trading suited to everybody? Do you see people who kind of pick it up any easier than others?
Yeah, so I think investing is something that most people can do, but trading is a little bit different because you need a lot more focus. You really need to get out when you're supposed to get out. You also need to have a stop loss, this electronic order when you get in at this price. And I love that, to have this stop loss, like a net, safety net. So yeah, you want it to go up as much as possible, but you also want to, cut your losses. In fact, those are the two golden rules, really. If you want to really put trading into two sentences, it's these two golden rules. So the first one is, you got to cut your losses. Like as soon as you're in loss, so we say 1% of your entire portfolio. So let's say you have a £10,000 portfolio, you shouldn't be risking more than 1%, so 100. That's it, £100. Obviously, you want to make a lot more, but you only want to risk a little bit. So that's the first thing. And then the second thing is to let your profits run as long as possible, right? So if you do the two, you're going to do very well. And people said to me, but Marcus, I do let my profits run. And I said, I know, but you also let your losses run. So you're not doing, the small loss and the big gain. You're doing the big gain and the big loss. So that doesn't work. It's still one-on-one. Okay. But then some people say to me, but Marcus, I get out immediately. I say, I know, but I've noticed you also get out of your profits immediately as well. So they come out nice stop loss. But as soon as they go, oh, I've made, 3%, 5%, that's more than I make in the bank. Yeah, but you can't do that. You're doing what we call a one-on-one risk reward ratio. What you really need is you need a 1, 2, 3, or 4, 5, 6, 7, 8. The losses need to be small and the profits need to be really big. So and a lot of people don't know that. They just go in and they go, and I said to them, so why did you go in at that point? I had the money.
Yeah.
It's like, come on, man. It's not because it's money. It's because, is it at the right price? Has it fallen enough? Because you were saying before we should talk about cryptos and what's happening in the market right now. Well, yes, let's do that at some stage when you're ready, because actually we want to buy when markets go down, not when they're going up. But most people, we are wired not to buy when markets go down. We are wired to panic and sell when markets go down. So it's actually the opposite. So
Yeah.
It's a lot of mindset.
Yeah. And, people may think that it's difficult. And of course, anything is until you've had some education from people who are already successful. But the technology plays a big part in this as well, doesn't it?
Well, nowadays, when I started in the 90s, it was, I just don't know how anybody made money, or maybe it was simpler then. But basically, even having a conversation like this with a student, where I can literally share my screen, and if they can't see my screen, they can share their screen. The way I learned was I was on the phone to an instructor in the 90s, and he was saying, this line, and I'm like, what line? You're looking at your computer. I'm at home looking at my computer. I don't know what you're talking about. It was a nightmare. And now we have access to technology. I mean, it's just amazing. You want to quickly look at Microsoft. You want to zoom in on the 1 minute chart. You want to zoom out. We didn't have any of that, when we first started. And I sound really old now, don't I? But it's amazing. This is the best time to learn. And I agree with you, Christian. It's all about education. It really is. And that's And really, I almost say, and that's all it is, really. So what's stopping you being like somebody in the city? It's just you haven't had the education yet. That's all. It's actually really simple.
Yeah. And what does it look like then in terms of your teachings, Marcus? So someone who comes to the investment mastery or the cryptocurrency, which is a separate program I know you offer, how do they actually learn? What's the process?
Things have really changed, because what we used to do is you used to have live events and workshops and things like that. And because of COVID, we just suddenly had to change the business to everything. So we have a whole club around either cryptocurrencies, or the other one is around, gold and so precious metals and oil and stocks, what everything to do with ETFs and that good stuff, which funnily enough doesn't move very much. People think the stock market's very volatile. No, because cryptos is really volatile. And to answer your previous question about what you need, as a trader, is you need to be okay with volatility, things going up and down, because if it goes down, I want to buy, and if it goes up, I want to sell. So you want that. So the way things have changed for us, and I think in many ways it's better, is everything is still live but online. So the courses that we run, they are now you don't have to fly in, you don't have to be in hotels, you can be home, and I love it because people have their whole families. We have one family with 12 family members, from grandparents to parents and uncles, and I think Amelie is like 12 years old, and whereas you wouldn't have 12 people flying over, having hotels, and sitting on a 3-day course, whereas here you can do that. And so that's the thing that's really changed the most, and I think it's better. So technology has really helped.
Yeah, and we've talked about the difference between trading and investing, but how do those two work together? Obviously, if you're building up profits in your trading account, do you suggest people, diversify that into different areas?
Yeah, absolutely. So, already diversifying, it's all about diversification. So in stocks, if you say, well, I'm in 5 different stocks, but they're all technology stocks, so you're all on the Nasdaq, and it's just little things like that. People go, "Oh, I didn't think of that, really." And so diversifying there, but then also diversifying into, are you doing cryptos? Are you also doing stocks and shares? Are you in precious metals? Are you buying an ETF in oil, which is doing extremely well at the moment? And then outside of that, we talk about your entire portfolio. Make sure it's not just trading and investing. We have a fairly large, I guess, double-digit property portfolio, making sure that it is diversified there as well. We have businesses. So yeah, it is important to diversify for anybody. We always say, I think it might be different to what you say. So let's see. We say you need to have at least 3 pillars, like minimum. Think of a table. Like 1 is like, you must be joking. 2, what are you going to do? But 3, it starts getting stable. And then it really starts. So it has to be minimum 3. What do you guys say? You say as many as possible.
Well, one of anything is risky, but agree that when you have 3, it's like 3 legs on the stool, right? That's really when you get the stability. So
yeah, that's when it starts, I think.
Yeah. So, I know outside of investing, you obviously have businesses as well. So, you've got other pillars in play, Marcus.
Yeah.
But let's talk now about crypto, because this is a hot topic at the moment. I guess really, crypto's been around a long time, but 2017 was when it exploded into the mass market, and that's 5 years ago now. What have you seen in those last 5 years?
Amazing. Lots of ups and lots of downs. And coming back to our previous comment about just volatility, just embracing volatility, being comfortable with the fact, because think about it, what you really are looking for, what does volatility mean? It means uncertainty. Right? Why is it going up? Why is it at this price and now at this price and now back to this price? That means people don't really know what price it should be. So what I'm really looking for is I'm looking for something that gives me as much certainty as possible, but is volatile. And it's like an oxymoron because normally they're too extreme. So that's really what I'm looking for. So what are the top coins? And the biggest mistake that people make, of course, is to say, oh, well, this one's cheap. Because let's say Bitcoin is random, let's say $20,000. And there's another one, which is $0.0003. Well, that one's got to be cheaper. That's not necessarily the case because it's to do with market capitalization. I don't want to get too technical, but it just means that what is the price times how many of the shares are actually in existence. If there's 1, well, then that's the market capitalization. But if there's billions of these things, then it's that times the billions. So it's how many of, and by the way, that's the same in the stock market as well. There's no difference there as well. So that even there's, I just went for the cheapest. Okay, but how did you work out the cheapest? Well, the price. That's already a big mistake, And so there are just some simple concepts. But what have I seen? I've seen lots of ups and downs, and that's great. But people out there hate it because they don't understand that if it goes down, you can buy a pair of jeans that was at $50, but next week it was in the sales at $25. And for some reason, it's like they do it on a day-to-day basis in the shops. But for some reason, when it comes to money, people go a little bit silly or crazy or doolally. They go like, "Ooh, no, you can't do that." And I'm like, well, no one said you have to put a lot of money in. Yeah. What people don't know is that in cryptos, you can start with $10. You don't have to have 20,000 to buy a Bitcoin. You can buy a fraction of the Bitcoin. They're cut up into 100 millionth pieces called one Satoshi. So it's things like that. It really is all about education, Christian.
Yeah, well, everyone loves a Black Friday sale, don't they? When, as you say, in the shops, but it's slightly different when it's, I guess, a bit more of an unknown quantity to people. Again, all comes back down to education.
Yeah.
Okay.
But you know what's really funny, because you just said that about Black Monday, the stuff, because it's Black Monday. Is it Black Monday? I think whatever it is.
Black Friday, yeah.
Black Friday. I knew it was one of them. I had a 1 in 7 chance. Black Friday, which I never do anything with, because I don't want any of the stuff, because I would have bought it already. But anyway, so that's the point. You will probably spend money on something. You go, well, it's discounted, so I'm going to buy it. It's junk. It's going to go to zero probably. Whereas we buy assets that have a very, very historical chance of going up. If you think about Bitcoin going up an average of 170, depending on who calculates it, 170 to 200% a year since it started, you've got a pretty good chance in a sale for it to go up, right? If it's already been there, it's averaged 200% over the last few years, actually 13 years, and now it's at a discount. I think people need to do their research, I think.
Yeah. So your long-term view of cryptocurrencies is they're not going anywhere?
Well, but first of all, blockchain isn't going anywhere, and I think that the payment mechanism is a decentralized, cryptocurrency. So I don't think they're going anywhere. People are talking about NFTs and the metaverse as being the big thing. I'm sure it is, but it's too early. This is speculation. You think cryptos are speculation? This is gambling, 101. So I haven't really gotten involved in that. But where I have a 13-year kind of track record, I'm good to go on 13 years. Yeah.
Yeah. Now, I'm interested just to get your thoughts on recurring income, because this is very much at the heart of how we help our members achieve their financial security, their financial independence. And it's all about identifying, well, how much do you actually need in order to be, secure and independent. But then that requires an amount of cash flow being generated from assets on a monthly basis. So, how can that work from trading, from investing, from the strategies that you teach?
Yeah. So I always differentiate between growing and cash flow. Those are the two things that people probably want. I need cash flow now, and I want to make sure that later on, when I'm not fit, so that I have enough money, and if possible, recurring revenue, which would be even better. So if you're investing, that's much more long term, so you can't rely on that recurring revenue coming right now. So if you want to do that, you have to do two things, especially in cryptos. One is trading, much more short term, and whatever you think about, the Wolf of Wall Street and all of those kind of things, that's not trading, right? Trading is really like, you can almost hear a cricket chirp in the background. It's like click. Okay, I'm going to have lunch now. The market does the work, you don't. And then the other thing is called staking, and staking is something which translated into stocks as dividends. Because they give you 3, 4, 5% a year in the stock market. And that was needed, by the way, of course, because of inflation. We did need that, and the banks used to give us that, but that's all gone now. So we need that just to offset inflation. So with staking, which is the equivalent, you can get 8, 9, 10, 20% even a year on cryptocurrencies. It is new. It's only been going for, let's say 5 years or so. So there are risks involved, but on a daily basis, it's getting increasingly more stable as the infrastructure is being built. It's like the stock market, years and years ago. And so, yeah, staking is another thing that you can do to get your 20% or 10% or whatever it is that you're looking for a year. So those are really the main things when it comes to trading and investing in cryptocurrencies. Now, there are other strategies, for example, on stocks, and this is something I did for years and years and years, which is covered calls. So you basically have your stock, and then you sell a call option, and that gives somebody else the right to buy the stock from you. So that's another thing that you can do, and you're looking to make 3 to 6% a month on that. But the problem with that, and that sounds good because it's a month, but the problem with that is, of course, in the meantime, the stock is going up and down. So the one thing that you have to understand about the stock market is that it moves. And as soon as you are okay with that, you're good to go. But it's not like a property. It really does go up and down and up and down, and sometimes up, and sometimes down, 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 down. And it's all cycles and it's all good. So you just mustn't get greedy. You stick to the good ones and you'll be absolutely fine.
And perhaps that's one of the dangers where people get trapped, is they get fixated on watching the market all the time. And that's not the right way to approach things.
No, not at all, because the market needs to do the work. In fact, when I first started, I thought I didn't know any better. So I thought, oh, it's intraday trading. That's what I thought you had to do. So I was there and doing exactly what I said you shouldn't do. I took my profits, felt really good. But when it went down, it'll turn. And I mean, I have stories I don't even perhaps want to share, but about, I was rushing home, went into the market. It was cold outside. It was warm inside. There was the whir of the computer. And I guess I must have dozed off, because a couple of hours later, I was like, what the? And I had made more money in that time than I had the previous 2 months. And the reason was because I didn't get in the way. And so I realized, I said, the market needs to move. I got to stop doing this looking all the time. And I moved to end of day strategies, as opposed to intraday buy, sell, which all sounds very exciting and glamorous, but it actually isn't. Yes, absolutely. Let the market do the work. And in fact, our strategies are such that if it doesn't matter if it goes up or down. So we don't put all of our money in at a certain price, because you don't know, do you, whether it's going to go up or down? We can use all the indicators and blah, blah, blah. But if it goes up, what we will do is we will put a little bit in. And then if it goes up, then we're sad, because actually we're in profit. And people go, why are you sad? So, well, actually, I wanted it to go down, which is against what everybody thinks, because what I actually want to do is I want to, if you have a property and you can get it at a half price, you buy 2 properties, one at this price, one at this price. Now your average price is here. So, we want to do that, because when the turn then comes, then I am in profit earlier. And if I wanted to get out at this price, whether I bought here or here, if I bought down here, I now make more profit. So, but like you say, you can't keep watching it. You've got to let the market do the work. And that's why we say 20 minutes a day. And on our club, we actually have a timer. And when you log in, you click the timer. And then at the end of 20 minutes, it actually tells you to go and live your life. Because trading and investing, life is not about trading and investing. It's not. It's just a vehicle to get you where you want to go. 20 minutes a day, that's it. Stop.
Yeah, I was going to ask you about the time requirement there. And I guess, like anything at the beginning, there's a little bit more time required to actually learn things to get going. What's that learning process normally like?
Yeah, exactly. So for the first month, you're probably going to be spending a lot more than 20 minutes a day. Obviously, you need to fit it in to where you can, right? But it actually doesn't matter when. And it's, from home. You don't need to go anywhere, which is great. So probably, 45 minutes a day. And if you don't for the first month, if you don't have that, that's fine. It'll just take you 2 months. Just do half and it'll take you a little bit longer. There's no, everybody's different. People have different learning styles as well. So in our club, we do the 3-day course, but we have, everything online. You've even got a recording of the 3-day course, but you've also got the actual home study course. And then you've got all the calls during the week. You can jump on to your calls with my traders. And so it really is there to suit everybody, I would say. That's how we set it up.
Yeah. Now, you've become financially independent through pillar 3, investment pillar, and all the strategies that you've explained.
Is that number 3 for you, is it? Number 3?
It is. Yeah.
All right. I'll take it.
And I'm really keen just to kind of encapsulate everything you shared today, what you believe is the secret to building long-term wealth using the stock market.
I believe that the secret is, taking a leaf out of Warren Buffett's book, is not be pressured by time. So what I mean by that is he doesn't actually mind if the stock market were to close in the next 5 years or longer. So he's not like, oh, it's gone down, I need to do something. He's like, look, I bought a good company, so I'm going to stick with it. There are cycles. Yes, it's gone down now, but guess what? That only means it's going to go back sometime in the future, and it'll come back down again. And so therefore, as long as you don't have this pressure to make money and cut corners and, I need to do this fast and I need to be, a lot of people think they need to be multimillionaires, before they're, 20 or 25. As long as you can become extremely wealthy, but don't put that pressure on yourself because you make mistakes. And so that, yeah, I think that is a kind of an overview thing, really. Yeah.
Yeah, no, thanks so much for sharing everything with us today, Marcus. If someone wants to find out more about the programs that you offer, the Investment Mastery, where's the best place for them to go?
Yeah, just go to investment-mastery.com, and you'll be able to, I'm sure, download something or other. Actually, I'm not sure that you can. I'm not sure. But anyway, have a go. Investment-mastery.com might be a good place. And again, one thing I want to reiterate is that it is one of the pillars, right? So trading and investing, whether that be stocks or gold or commodities or ETFs or sectors or whatever that might be, it might be cryptos, but it is one of the pillars, because once you know trading and investing, you can really trade and invest anything. So yeah, I think people, they generally say, well, that's for people in the city. No, it's not actually. It's actually for us, but they don't want us to think that. They don't, because then the gravy train is over for the city boys. And
yeah. And this is definitely something you don't want to be doing without some guidance, just going in there, testing it out for yourself.
Yeah, just well, if you don't have the rules, and there are 5 rules, which is, where do I get in? Is it here, here, or here? Then at what price do I get in? You can't just buy now because you have the money, although people do. And the next one is, well, how much money am I putting into this one? And they're going to be different every time because of risk management. And then where do I exit with a small loss, and where do I exit with a big gain? Those are the 5 things. And I'm telling you, most people do not even have one of those, not even one. I don't know, and now what are you going to do? Well, I don't know, and then it's all emotional. Well, you just can't make money.
Absolutely.
With rules, perfect.
Absolutely. Yeah, a clear plan, good support, great connections is always the way forward. So Marcus, thank you very much once again. Great to have you on the show today.
Thank you so much. Pleasure.